Good morning. My name is Hesbon Nyakundi and welcome to a brand new edition of the CEO Chat. This is an initiative that is coordinated by the Kenya Bankers Association to give you an opportunity to interact with bank CEOs on various industry issues. Now, this season, the broad focus of the chat is on international trade opportunities and financing. And our host today will kick us off with insights on international trade opportunities, particularly for SMEs. Please feel free to share your questions via the chat box for those who are joining us on Zoom, and our host will be able to respond to those questions after his presentation. You can also follow the discussion online, on Twitter, and across all other platforms under the hashtag CEOChat. Our host today is the CEO of Habib Bank AG Zurich. His name is Mr. Asim Basharullah. Asim has over 20 years experience of international banking experience with a proven and successful track record in wholesale banking, SME, commercial banking, trade and treasury solutions, syndicated financings, corporate advisory, and fundraising. He also has extensive leadership experience in developing and executing transformational strategies, including devising customer-centric financial solutions. Mr. Asim has a strong and in-depth understanding of conventional and Islamic finance solutions for SMEs and commercial clients. So at this point, it's my pleasure to welcome Mr. Basharullah to chat with us. Welcome, sir.
Thank you very much for having me over. Thank you, Esbon and the KBA team for having me to speak on this very important topic. SMEs is a backbone of any economy, and in Kenya, it constitutes 90% of the non-farm payrolls. It contributes less than 10% of the GDP, which means that there is a lot of room for growth for the SMEs to contribute to the GDP of Kenya. Just to give you a perspective, in developed economies, it constitutes more than 70% of the GDP. And in developing economies around the world, it actually constitutes more than 35%. So there's a lot of room for growth. SMEs, unfortunately, in the last 2-3 years since the COVID-19 pandemic, has had to face a series of challenges. The global supply chain constraints, the rising inflation, the regulatory changes, as well as the cost of capital, has really made the SMEs to navigate and overcome the challenges of growing their business. And what we've seen as a bank, not only in Kenya, but across the countries that we serve, is that there are ways of overcoming the challenges. Certain challenges are actually systemic. They are subject to the global economic challenges that are facing the entities. And that's something that will take time to overcome. But what's really important to really understand is that how do you really look at your business model and plan for the future? And what we've seen in various countries, and there's empirical evidence in some cases, that some of these successful SME setups or entities across the world are able to figure out what their business model is and create differentiation in their product mix or their distribution channels. Some of the things that are happening in the last few years is that they have been able to really understand their target market. And I believe, and this is something we use as well internally at HBZ Kenya, is that we look at our customers' behavior. We have developed a concept broadly under the ambit of data science, which means that we look at our customers' behavior and how have been they using our products and our services. And I think that database analytics and mining is a very important area for the SMEs to look into. And and there are tools for it. I mean, for example, Google Analytics is a great tool to have, just one of these. And there are many other sort of technical tools available for you to understand your target market. The other thing that we looked at is basically, and that is very important. And I think that if I were to sort of put a factor around it, I would say that a significant portion of the financiers, not only just banks, but also non-banking institutions, financial institutions, do look at how effective is your governance framework, how adaptive you are in putting up a team of professionals. If you have a team of professionals in areas of finance, marketing, production, and operations, that actually helps a lot to the value addition of a company. And financiers, like banks, look at that very favorably. And that is something that I would encourage SMEs that are past their embryonic stages of growth to start looking at developing a professional layer of management. And that really helps, because what they do is they provide you professional experience in looking at ways of creating value addition, not only in your products, but in your new market opportunities. Capital is always a constraint, is always a challenge. And most SMEs, or especially in the micro setup, do end up raising capital from their friends and families. That is a problem, for sure, because the cost of raising that kind of capital is expensive, prohibitive, and undocumented. So the government have bodies helping the micro SMEs, especially, and the SMEs to an extent, in raising capital on favorable terms. Banks do participate in such schemes where the credit risk is backstopped by guarantees from the government. These are, in event of default, we can rely on the government to support the financing of entities. At the same time, what's important is that banks do look at financials very carefully. And if you have the right set of financials, if these are audited by well-known establishments, there is clarity on the financials, banks do look at favorably, and you are therefore able to raise your capital, debt capital, on favorable terms and conditions. Then there are obviously other ways of doing it through DFIs. There are private equity setups, there are venture capitalists, but these are more expensive in nature, and what they require is more in-depth analytics to tap into financing is to go through the bank market, but set of and business model that is easy to understand and is easy to, and in which it allows the banks to understand exactly what kind of product or services differentiating model do these SMEs have, and and they can grow from. Now, in terms of international trade financing opportunities, most of the time, the trade businesses opportunities are constrained by able to not raise financial opportunities through with their suppliers, and suppliers normally do prefer letters of credit, okay, or advance payments. Given the uncertainty around these days, I think they prefer advance payments or letters of credit from viable entities. Banks are willing to participate in those kind of opportunities. We are willing to look at providing letters of credit or some sort of arrangement to international suppliers if you have a very strong correspondent banking network. For example, in our case, in HPZ family, we are one of the biggest trade finance banks, which is our biggest market. But even globally, we are a sizable trade finance bank, and what we do is facilitate suppliers and buyers in the markets we serve to promote trade flow of businesses opportunities in those markets. Africa for us has been an opportunity of late. We have not explored it to the extent we should, potential to, and we do expect to. And we increasingly see customers leveraging our presence, our our strength as a Zurich-based bank to be able to facilitate letters of credit and to promote their businesses by importing raw materials necessary to create value-added products for the local market and in the regional market. So I think this is what I wanted to sort of summarize it with, and I'm happy to take any questions.
Thank you so much for that insightful introduction to our discussion today. So we have a few questions for you online. So there's one question about how can SMEs map out these opportunities? How can they identify these areas where they can then add value and sell their products outside in the export market? Then tied to that is the aspect of financing. How do they access financing to be able to add value in the value chain and be able to reach those markets beyond their country?
I think that's exactly the kind of assistance banks should be able to step in with. What we normally do as banks is we understand the value chain of our customers, and I think the right now the biggest challenge is the cost of the value chain, right? Suppliers, in the case, let me just go back a little bit. See, when you're actually, Kenya largely relies on raw materials that are imported. When you're looking at imported raw materials primarily, suppliers prefer to have advance payments, or they need to have a significant amount of LC margin put in place, which means that the cost of importation is high. Now, this is where banks come in. We can facilitate providing letters of credit support to suppliers through their banks and facilitating and bringing down the cost of the capital significantly. For example, if you were to actually issue an advance payment, that is very expensive because normally an advance payment is funded by a bank loan or it's your equity. And both cases, the cost of the equity especially and bank debt is higher than, for example, the same amount of capital you need through imported letters of credit at perhaps half the price, because you're only paying the commission on the LCs. That is a significant saving at the end of the day. Significantly. If you're able to bring down your interest cost significantly, you're able to save certain amount of money that you can spend in understanding your new opportunities for promoting your products outside the marketplace. Now, going back to accessing the new markets, what you can do is really, I mean, there's a lot of data available out there for you to be able to understand where are the opportunities lie. Okay, there are consulting entities. You can do desktop analysis, honestly speaking, to figure out where you want to sell your products to. And there are agencies that facilitate that for you as well. So there are different ways of doing it, but you need to present, I think, a fairly clear and a well-established business model to banks for them to consider how to help you in those opportunities.
Yeah, thank you for responding to that. We have another question regarding which kind of incentives, in your view, do you think can be put in place by both stakeholders in the private and public sector to be able to encourage SMEs to venture into external markets?
Sure. Participation between the private and public sector it does help in this, because one of the ways to actually doing it is through having the public sector entities provide some sort of liquidity and payment support to the private sector for them to go ahead and lend to the SMEs. That helps a lot because that brings down the cost of capital. What we do is that, you see, there are government to government tie-ups, okay? And what happens is that in certain cases, the governments actually talk to the other governments and therefore are able to find out where are these bilateral trade agreements where they can sort of capitalize on both ends of the spectrum. So, for example, I will give you a small case in point. COMESA, right? That's a great sort of framework that we have in Africa, right? So, import Egypt, for example, okay? The cost of regulations is very low, is eliminated, right? And that sort of support comes in from interaction between governments, So you know exactly what sort of bilateral trade agreements we have in place with various countries, between various countries, Kenya and other countries. And if you know that, you're able to actually present yourself, again, with an opportunity. And you can tell banks, like, look, here we have an opportunity where we're importing certain raw materials from this particular country, and we are exporting certain products to these countries, and let us know how you can help us from that perspective. And sometimes banks say, okay, now that's a viable solution, but the failure risk is high. How do you ensure that you're able to successfully sell your products to these markets? And is it, because if you're not able to sell the products at a certain volume, it's not, profitable. So how do you sell that? And the way you can do that is basically figure out through the tie-ups with the government. You say, look, okay, I'm going to be financing 50% of this, of the loan portion, okay, and 50% funded by the government. Or I provide 100% of the financing, but the payment guarantee can come from the government. That actually helps the bank a lot to facilitate that sort of trade business opportunity or the selling business opportunity for a Kenyan SME.
Now, from a lender's perspective, how does an SME accessing an external market enhance its ability or opportunity to access more financing?
Cost of capital, access to credit has always been a challenge. And the reason why it's a challenge is because of the fact, more often than not, what we've seen is that the quality of the information, and I'll be a little frank over here, it's important. The quality of the information in the form of business or financial is a little unclear for banks. And that actually elevates the risk profile of an SME internally. What we encourage customers to do is to present a fairly clear, viable business plan. Okay? Show us your operating strength. Show us your true financial condition. It's always good to have a fairly robust audit firm independently vet the financials. It really helps us a lot. And if they're able to share above that a business model and set of financial projections that are reasonably reliable, we will be happy to look into financing it for the right amount and for the right price. And we do that. We encourage that. The thing is, we now have in place risk-based pricing models by the CBK. And the whole purpose of that is to evaluate the risk profile of our customers and price the risk accordingly. So there is no such thing as, exorbitant amount of interest rates being imposed on customers it's all driven by the risk profile. And the risk profile is driven by two things, qualitative risk profile and quantitative risk profile. If they're able to present themselves with the right sort of data, quantitative and qualitative data, we'll be more than happy to look into that favorably, because the whole purpose is to facilitate, access to credit for SMEs at the right price, of course.
Absolutely. Now, there's a call to encourage SMEs to venture into sectors like manufacturing. What role, in your view, do you think other stakeholders have to play in supporting SMEs in that entire value chain of supporting SMEs to access those external markets, especially from the aspect of capacity building and also building understanding on the standards that are expected of goods that are intended for the external markets?
That's a big question. You see, manufacturing is capital intensive. When you're setting up a manufacturing based business, it's capital intensive, and therefore there's a large amount of capital that's required to set up the business. This is an area where banks generally try to sort of move away because of the fact that the startup risks are high. Because of the fact that startup risks are high, this is where sort of government support has to come in. Okay, more often than not, you cannot just put all your money to start up the business, right? You have to have some level of support, and I think that support from a lot of government-sponsored agencies, okay, that are willing to put and SMEs in the manufacturing sector that are able to present a viable model that creates value addition for the country. Okay, clearly, if that results in employment of labor or workforce, if that results in creating higher taxation opportunities over the period of time, if that results in creating value addition for the country, so if anything that results in creating contribution to the GDP, that's where those entities will be encouraged to raise capital from the for their manufacturing setup. And predominantly, there are government agencies that are able to do that. Now, banks can participate in those programs, and they do normally, but that's again it's on a participative basis, because you see the ultimate risk in this case is really the startup risk, where the risk of failure is high. So how do banks ensure that their capital or the loan that they provided is protected? And that sort of protection, credit protection, comes from agencies. Now, one of the other things we can do is that there are insurance companies, by the way, locally, regionally, and globally, insurance coverage as well. So, for example, there's a lot of companies that provide receivable insurance coverage as well. So you might be able to sell those products in the international market, but what if the risk of collection is high? That kind of collection risk is credit protected by insurance agencies. And that is something that the banks, again, can tie up with the insurance firms, such as these, to cover themselves on the trade risk insurance side.
Great. So there's another question that regards the aspect of facilitating exchange of learnings. I know you have Habib Zurich has a presence in more than 10 banks, 10 regions actually in the world.
Yeah, countries,
so
yeah.
What are some of the learnings, in your view, you've seen that SMEs in Kenya can actually benefit with regard to accessing markets outside the country?
I'm taking that the question is that how do you leverage our presence countries, or what is the empirical evidence that we have?
The learnings that maybe you've seen from other countries. What the approach maybe these other SMEs are using to leverage into these opportunities?
I think the approach is not that complex in nature. It's very standardized in nature. And it's very simple, honestly speaking. What we like to see is, at the end of the day, um, a viable business model, um, set of financial statements that are audited by reliable firms, uh, a decent performance track record. At the end of the day, like I said, when you are in a growth life cycle, it's difficult to access credit, very frankly speaking. But if you're in the business for at least 3 to 5 years or more, and you have been able to navigate through the economic challenges over a period of time, that means you're a survivor. If you're a survivor, that means you either have a very effective management, you have products that are well received in the marketplace, you either have very strong, effective channels of marketing or distribution. You must have some unique selling proposition at the end of the day to be able to raise loans from banks. Okay, and if you're able to present yourself with a proper set of financial data, business profile, a viable business model, are able to understand the risks inherent, to understand what are the global challenges you have, what are the global risk factors that can affect your business, and you can actually talk about it clearly to banks. We'd be more than happy to look into it. And that's the kind of theme we've seen across the presence countries. Just on HBZ, I'm talking from experience in other markets that I've seen. Every time an SME sponsor has presented him or herself with the right business model, financial data, clarity of mind, of how to navigate the business challenges you have had a successful track record, has able to overcome some of the global challenges. That plays a big role. When it's a small secret I wanted to share over here, we have a target market strategy. And whom you want to do business with. And then there's a risk acceptance, like how do you want to do the business with? One of the key sort of findings we've seen is that we look at companies that have been able to navigate the global challenges. For example, if you have been in the business for, let's say, 10, 15 years, okay, you're bound to have seen the global financial crisis of 2008. You're bound to have seen the commodity, including oil, price plunge of 2014 and 15. And if you're able to even survive the current global economic environment, clearly you're a survivor. You're a successful survivor. Okay, it's not that you've been able to hold on to your markets, but you're able to actually have a very strong survival instinct in terms of being able to assess what are the challenges that lie ahead, adapt yourself, keep your balance sheet intact, and being able to continue to be able to borrow funds. If you're able to do that, for example, you're a star, definitely. So these are the kind of things we look at. The other thing we look at basically is we've seen, in some cases, how reliable are your audited financial statements. Now, I understand when you're a startup, it's really difficult for you to actually come up with the audited financial statements. But if you're in the business for 3 to 5 years and you have stable financial position, I'm not talking about astronomical profit margins. I'm talking about basically stable financial positions, steady sales growth, probably beating annual inflation targets or inflation rates rather. You're able to demonstrate that to the banks. We will definitely look at it very favorably.
Okay, there's a contribution here from Indeje. He's talking about the importance of promoting foreign direct investment for SME development. What role, in your view, do you think, or how will this kind of structure help SMEs to be able to scale and access global markets through foreign direct investment structures?
See, there are two ways of foreign direct investment. One is basically a foreign direct investment by bilateral countries. Okay. One is a foreign direct investments through multi-creditor agencies programs. Then is basically foreign direct investments in the private sector itself through private equity setups or funds or venture capitalists. All in all, this scheme is to be able to sort of have those foreign direct investments percolate down the economic chain at the end of the day. For example, in the case of construction, infrastructure, in the infrastructure sector, right? If you're making bridges at the end of the day or roads, at the end of the day, there's a foreign direct investment, but ultimately you need local contractors and subcontractors to be able to put the last piece of the infrastructure development in place. That creates employment, that it creates value addition, and if you are able to demonstrate, if you're able to demonstrate that you have these kind of orders in place, you've been mandated by the main contractor, and the payment is guaranteed by local government agencies or even by the state government or federal government, and you know that money will actually be paid because it's through a partnership program under the FDI scheme. We can go ahead and fund those guarantees, opportunities, backed by a very understand will eventually be paid from the agencies funding those programs. So what it does is that it helps them to raise the kind of guarantees you need to raise to promote the business, and once the guarantee is raised, you get those capital in to fund that capital into delivering the mandate, the contract. And when you do that eventually, you are going to end up hiring people. You're going to actually end up selling your services. So it helps your bottom line, it helps your top line. At the same time, it creates employment opportunities for the population, employable population at large.
Earlier you spoke about the regulatory framework, which differs from market to market. There's the aspect of taxation, for example. What should be done, in your view, to enhance the understanding of SMEs that would like to venture into the global markets to understand the regulations, the regulatory framework in the various markets, and so that they're able to venture there without any challenges? Yeah.
Well, see, the good thing is now you have the WTO in place, right? So the WTO really helps a lot because that's extremely transparent. The regulations are extremely transparent. You can actually go ahead and look at the website and understand what of doing business in another country, okay? And how does sort of sometimes in some cases, how does the double taxation help you? So that's what it does. It's actually, the WTO program generally has eliminated any excessive forms of taxation to promote businesses, especially that are in the value addition sectors. Unfortunately, after the COVID-19 pandemic, economies generally across the globe are becoming a little protectionist in nature. And they're trying to protect their local sectors, in some cases in agriculture, in some cases in manufacturing. So there are difficulties of penetrating into certain markets. There are a little bit of barriers to entry in penetrating in those markets. But nevertheless, by and large, because of the globalization at large, you are able to actually figure out which are the markets you need to serve in. You can, like I said, go into the database of WTO and figure out what are the local taxation regimes you have in place, what kind of import duties, customs duties that you will have to pay. and see if that does make sense. But by and large, because of the treaty programs we have in place now, that actually is able to, you're able to understand. For example, I'll give you an example actually, just occurred to me. If you are in the textile sector in Kenya, and you are importing raw materials for value addition into made up of garments for exclusive export markets to the US, for example, okay, that comes under the WTO at the end of the day. That really helps you a lot. So at the end of the day, it's encouraged for you to actually sell it, because what you're doing is you're creating employment over here as well. You're actually you're taking a raw material, a yarn, and you're converting it into a finished good, a finished product. That's value addition. So anything that is value addition, and that is sold in certain markets, like for example, the US, that actually helps facilitate a lot. So there's a lot of opportunities, for example, in such kind of business setups. So value addition really is what you really need to think. That am I adding value into these export markets? At the end of the day, if you're adding value, you certainly will be given that set of preferential treatment by the home countries.
You spoke about technology earlier. You alluded to technology and also the aspect of the COVID-19 pandemic, which really actually expanded the frontiers of the adoption of technology for efficiencies.
Yes.
And also enhancing, access to more opportunities. What, in your view, do you see is the role of technology in supporting SMEs to be able to scale the operations and reach, international markets?
Technology generally reduces the cost of doing business. That's pretty much it. There's what we've seen, and I'll give you a small example. In our case, as a bank, it may be not the best example, but I think it's a fairly good proxy to understand how we're doing it. In the last 3-4 years, we've been trying to figure out what more can we do for our customers. We have examined the market. We looked at our competition. We have looked at our database of customers, and we've looked at the behavioral profile for the last many years. And we've realized that there is a certain change in their preferences and needs. And because of that, we are trying to now come up with new products. In all these cases, on all the sort of exercises, we've used our database in the system. We have mined it, we've analyzed it. We did not hire a consultant. We did not hire any agency. We did not hire the services of any external party to be able to figure out what we need to do. And as a result, we've actually put a cost around it. And if I look at the cost of this technological studies in place, this is all internal cost, which is effectively free for us. We've seen the amount of revenue value addition we could actually secure in the next, in the medium term. That helps us a lot. So the thing is, you have it in place. You have the database in place. When you are actually, if you have an ERP program set up, if you have an ERP system rather in your company, you understand your client's sales behavior, you understand the client's receivable behavior, you understand which area of the demography is where the client resides, and how good is the opportunity to sell more products in that sort of demographic area. This is all available in your system. You just have to go and mine it. Okay. I'll give you a small example, and it's a stale example. It's a little stale, but I think it sort of resonates in my mind all the time, and it really helps me to sort of understand how to do database analytics. Many years ago, I was in Saudi Arabia. I used to work in Saudi Arabia, and we were trying to finance a hypermarket international hypermarket chain. And they were setting up a, a presence in certain part of Riyadh, which is the capital, where there weren't many people. So which be setting up a hypermarket in a limited amount of people in the vicinity. And they said, look, it's very simple. What we do is we take a compass and we 10-mile radius to see how big is the market opportunity and how is that demographic profile expected to grow in the next 2 to 3 years in terms of houses, hospitals, and schools. And we see there's a population growth coming in. There's going to be a little bit of migration from the congested areas to this area. So we're willing to actually spend that amount of capital in building this hypermarket by doing a simple demographic analysis, current and future. And lo and behold, they were able to break even within the first year because people started flocking into that hypermarket. And there was migration of population taking place over there. So all they had to do is figure it out based on their database by looking at a similar model they had put up in another country in another location. That's it. So it really helps a lot. I mean, I think I'm a big believer of this, by the way. I think data science is a great tool to have and a great study to sort of delve into. And I think that if you really take that seriously and believe in it, you'll see wonders coming out of it, honestly speaking, because that's exactly what it is. Fintech companies are creating services by just doing data analysis. Everything is based on data science these days. You take any major global firm, Amazon, Facebook, Google, they all rely on internal analytics to be able to figure out who their audience is, target market audiences. And they've created tools at the end of the day. So Google Analytics is by Google. They've actually created an analytical model which they can now, even people like us can use it for our benefit.
Yeah, you mentioned the issue of leveraging on data through analytics to get some insights on the markets. I think that is an area that requires some kind of specialized skills. So are you encouraging SMEs to invest in these kind of skills to analyze the data and be able to understand how to leverage on these markets?
Yes, in a way I am. First of all, they're easy to understand. These are not complicated models to understand. You can actually do it yourself. They made it so simplified in nature that you can easily use it, and you can self-learn and implement it. But honestly, sometimes you can even hire young minds, and I'm telling you, they think differently because they belong to the current generation where technology is at the forefront of everything they do, right? So they can absolutely leverage on that. Okay, again, you can actually hire a young graduate and commission him on a study, obviously on a confidential basis, to figure out where are these opportunities that I can get into. And that person, if he has any form of IT background or any form of computer analytical background, he can easily or she can easily help you in putting up a study together, and you can use that study as a way to put a business plans around it.
Now, there's the other aspect of competition. The international market is a
Yes.
very, very competitive space. And for SMEs to venture there, they need to align or to be competitive. How, in your view, can they be competitive in these markets?
Well, the biggest driver is to be able to reduce your cost of capital, because the cost of capital is the biggest portion of your P&L. I mean, the interest cost is extremely high, or your opportunity cost of setting up the business is very high, which means that if you are competing in the global space, you have to be able to raise your cost of capital efficiently and at on economical terms, because then that amount of money saved can be deployed for creating products at the end of the day. This is where I think the government or governments need to come in at the end of the day. They need to be able to provide market opportunities. Should be able to provide access to capital at favorable terms, either directly or through any partnership programs with banks. And able to do that, you are then able to at least put yourself out there in the global market on a competitive basis. Then what you really need to then figure out is that are your products or goods or services, whatever line of business you're in, are you adding value at the end of the day or not? The biggest advantage Kenya has is that it's an extremely tech-savvy country. Okay? We should never forget the fact that M-Pesa came from here. And it's a pioneer. It's a Harvard Bay, if I'm correct, and I think I'm correct on this one, I think it's a Harvard business case study. Okay? And it came many years ago. Other countries, are now actually following the business model of what M-Pesa is. It's such a successful story as this, is that other countries are following it, are adapting to it now. What it really means is that, by and large, given the literacy rate of this country, given the technological innovation capability of this country, you're able to actually create value addition in the marketplace. Especially, and it's not just basic manufacturing setups, these are services at the end of the day. Information and communication technology is a big sector in any economy now. Okay? Kenya can present itself in the global ICT marketplace as one country where it can add value. Because it just comes naturally to us at the end of the day. Literacy rates are high, understanding of technology is high, adaptation to internet. So there are a lot of companies that are at the incubation stages over here in Kenya that can be harnessed and can be into viable setups and position themselves in the global marketplace.
Right, thank you. So we have a contribution here from Athena. She says there's need to include SMEs in the supply chains of multinational enterprises. This linkage can lead to skills and knowledge exchange and adoption of technology, making SMEs more competitive globally. Maybe aligned to this, there's a perception that big businesses have a better advantage because of the economics of scale to access external markets. Is there any hope for SMEs? Do they enjoy the same kind of economics of scale? Look, especially consider they're actually small enterprises. How can they leverage on this, scale? Can they build alliances, for example, work together in certain, markets?
Yes, they can. Look, the reason why the economies of scale are actually more efficient in large setups is because, very simple, the fixed costs are low. The operating leverage is high. Sales, every time there is additional value, there's an increase in variable cost, it actually propels the scale of increasing your sales volume and profile in the markets you operate. So the economy of scale is a natural disadvantage. We have to agree to that. But economies of scale can be addressed, like I said. And the only way to address the economies of scale is to be able to bring your cost of capital down. If you're able to bring your cost of capital down, and what do the MNCs need? MNCs need some level of service at the end of the day, or a product input that they think is viable for their production chains, value chain of their whatever products they're actually selling eventually, right? So let's take an MNC in Kenya, right? The MNC in Kenya has to have some level of component need from the SME market at the end of the day to be able to tap into and help that component into creating a very cost competitive product that they're able to sell into the global marketplace, right? So you've got to understand what do they really need at the end of the day, right? I mean, that is what's important. So you need absolutely participation in the global supply chain of MNCs does make sense, but at the end of the day, you need to figure out first as to how cost effective it is. And again, the cost effectiveness emanates from the cost of capital, and the cost of capital has to come from your ability to present again a viable business model, um, clear set of financials, and basically and some sort of a fundraising ability to be either to raise the money from the bank market or through some sort of government-sponsored program. If you're able to do that, that's great. But the thing is, the cost of capital, I think, is a key issue. And like I keep saying, the cost of capital can only be reduced if you're able to present transparent set of your business financial model.
Okay, great. Now, the big issue for SMEs is really accessing financing. And one of the drawbacks to access to finance has been the informality or lack of formalization among some of the SMEs. Does formalization also play a key role in their opportunities to access credit from international markets, and also to be able to supply their goods in those markets?
Absolutely, absolutely. Formalization, what I understand, is basically a proper incorporation of a setup, a legal setup. It also means that you have a well-presented, well-articulated business financial model. It means that you have an operating history, successful operating history. If absolutely, that's what helps to increase your credibility in the global marketplace. You have to have these kind of setup. You have to be legally incorporated properly. You've got to have the right set of audited financials to be able to present yourself as a viable, credible entity to be able to raise capital. Yes, of course. But that doesn't really come from, foreign participation in SMEs, especially if they are not legally incorporated. That does become a challenge. Because you see, ultimately what happens is it's the application of funds. You need to be able to understand where is the application of funds. How are these funds that are being deployed into the company being used? And that results in lack of transparency at the end of the day. You've got to be as transparent as possible to be able to showcase how are you going to be those funds effectively into your business.
And then tied into the financing aspect of it is the issue of capacity. Especially to build important skills are required, especially in venturing in these markets. What do you think should be done, especially in terms of collaboration between interagency collaborations? What do you think should be done, or how should that be structured to be able to support these SMEs to acquire these skills and have the capacity to really be able to compete in the international market?
Well, you can leverage on the DFIs because more often than not, DFIs that are present in one country are invariably also present in the country in which the SMEs want to sell their products in. So leverage the DFI programs, and that helps a lot actually. And there are very well-established DFIs in this country as well, regionally and regional DFIs as well as global DFIs that I think the SMEs should definitely tap into.
Okay. So I think we are now coming close to the end of our discussion. I don't know whether you have any final thoughts or advice to SMEs or any SME out there that would like to venture into the international market.
Sure. I mean, I'm just going to emphasize on the need to have a viable business and financial plan. Have it as articulated as possible. Keep it as transparent as possible. Um, when you come to banks, showcase your ability to navigate the challenges globally, and able to present yourself with a business plan that makes sense. If you have an operating history, successful operating history, in the same line of business you're in for at least 5 to 7 years, you've surely gone through some of the challenges, not only inherent to your business, but even that are unique, not only unique to your business, but also are systemically prevalent in the time you've been there. So, of course, if you're able to demonstrate that you're able to overcome these business financial challenges and are still there and are successfully doing well, I don't think any bank should shy away from that. I mean, we certainly don't mind looking into an opportunity of such nature, and we've been doing it. In the recent past, there are setups that have come into place 3-4 years ago only, and they're growing fairly well. And we haven't shied away from examining financing opportunities of such setups.
Right. Thank you so much, Mr. Asim Basharullah, for joining us on my chat with the bank CEO this morning, and we thank you for the insights you've shared with us. I'm sure that the SMEs that have dialed in have really benefited from those insights, and I'd like to encourage those who are participating in this call to send any further questions they may have, and be happy to forward them to Mr. Basharullah to be able to address them.